Hey folks, welcome to Wednesday, 29th September 2021. What we saw was yesterday quite a bit of downside volatility, a rising VIX, and really oil coming off on the tops. Got off to a great start in the day, ended up down at around 0.5% towards the end of the session. But nonetheless, 0.5% pullback given the context of what's going on with oil over the last 2 weeks and really the last year and a half is very little to be worried about. We were looking at a nice little cheeky long and cable this morning, and that level is actually breaking down now after about an hour of trade on a dollar that looks all resurgent again. So let's get over to the charts and see what we can look at here. So, really looking at this Dixie, where we lie on the Dixie right now, coming into the daily bar chart, you can see here, or sorry, that's the Dow. Let's just minimize this one and get up the Dixie here. We're back into this zone, so we're just trading right here, 93.80. And we're in this zone, which is really the top of trade on the 20th of August, and then running into this significant weekly level above 94.07, which was, well, essentially, if I put this on the week here, this is quite a significant level. I wonder if I can change this over to being a weekly bar right now. And actually, it's coming into, yeah, sorry, actually just in here. But actually, if I switch back to the daily, it's probably coming off of one of these levels here. So we're just going to rework that area to be in this area, just like this. So yeah, I think we can work up in the Dixie further up here and really pushing up towards this mega uptrend that is broken, and we're trying to recover that right now. So, basically, the long story short, dollar on the front foot. No time to really start to buy into the euro. I don't think at this time. If you were doing that, I think you're really not cognizant of the gaping drop below here, on the below the support that is the sort of 16875's support back from the low of the 20th of August, Friday the 20th. Now we've breached that, and really we're opening up quite a bit to the downside. There really is no decent support until we look back to what were essentially summertime levels in July 2020 here. We just worked incredibly fast up through this area, starting from July 21st up, and I don't really see, if I sort of take my face off the screen, I don't really see any decent support areas here um, until we do get down to that 15,645s level, which was a level going way back to the high there on the 10th of June 2020, in the midst of all of COVID troubles in Europe. So, some big levels coming through on the euro indeed, and supports are broken. Looking across to the Nasdaq here, getting this up on the daily. Yeah, we saw quite a bit of downside yesterday. Top to bottom. Getting the chart calculator on, high of day to low of day was a 2.97% move. I think we're on the retracement drive for now, albeit it's very hard to not see this 100 EMA trade. We are on the bounce, from yesterday, from top to bottom. Retracement wise, we just pipped into that 38% retracement at 14,913s, and the market is now, I'd say, going to take a bit of a breather on the bounce. For now, we could indeed breach the day's lows currently in yesterday's lows, and then get into this 100 EMA area. There's a couple of different levels to be looking at around here. I mean, if we go out onto a weekly chart to kind of look at this in a bit more of a simple sense, take this retracement off our screens. Yeah, I mean, it's hard to not see the market want to trade into this level 14703s. I think that's quite a nice area for support. Should we come under pressure to the downside, but largely the 100 EMA still does reside just below that area there. You can see on the chart on the right, on the daily bars, I think we could flush down, kiss off that 100 EMA, and then find these buyers coming in on support. But if you want to get long in the the Nasdaq, I think um, you're going to need that T notes to stay buoyant and to really be moving up on the day. If T notes are dropping, essentially you're going to have a situation where the real yield is rising, and therefore investors are probably going to be, going for a bit more of that safer return as opposed to kind of, higher risk tech stocks essentially. And that's certainly a theme that played out yesterday and Monday. So yeah, moving on, SPOOs. SPOOs here has really come back to test on this 43.74s. It's a double tap high on the 13th, 14th of July. So, it's all important for the buyers to pick up this space in this area and reclaim this whole zone and, not only push back to the 50, but above. Yesterday, what I was thinking about with the SPOOs was that we were essentially, I'll probably just hide some of these moving averages like the 50 maybe. What I was kind of looking at yesterday was essentially, are we, was this sort of leg up here really a pullback within a greater pullback? And I think really, no, we've probably had the pullback here. And even if we do retest on the 100, we should be supported and then continue with general mother trend to the upside. A nice area to get involved right now, but I think this market, if you are going to be getting short, I think this is a nice area, but it's a wrong time of day, really. I mean, we're looking at this, at 10 to 10 in the morning in Europe, in Western Europe, so I don't really see that we're going to hold a cap here on the day. I'd really probably like to see some weakness come in on this level. Then, as we come into the U.S. session, and probably see a retest and either a success push over. Well, in that case, then you can look for a longs on any sort of pullback, or we don't push above coming into the session. We just push and hold on the U.S. session, and then the sellers come in off of that 43.74s and drive us down to retest on the 100. That's really how I'd be looking at trading SPOOs today. And the Dow, yeah, you can see here on the Dow on the 60-minute, it's kind of showing this bear flagging channel here, right? So we can certainly channel up in that, in this thing, but really it is being held at the moment. I'll probably just get rid of this trend for now and tidy up my charts. You can see this bear flagging activity going on. Yeah, we're bouncing from this area 34,200, so that I was looking at yesterday. I'm still keen to buy it. So should we get a retest down within the US session, I'll definitely be watching that to see if it can hold. And if it does hold, a push above and any sort of a pullback, I'll be getting in on and then getting on for this trade back up to the 50 EMA, 34,775s, so on and so forth. Is the tone souring at all in the US for support from QE? I don't think so. I mean, I think a lot of market commentators are trying to bring that in at any given junction, and any downside, brings into conversation of when is the timeline for tightening and tapering, and but I think the base case is more up, more upside. So, yeah, what we saw yesterday was this clear rejection. I think this was the opening here. Yeah, half two. Clear rejection on the 50 EMA and just driving down to put in the biggest move on the day. And then 34,200s, nice target for the shorts. And then you can see here, really those shorts are now liquidated, and generally the market is drifting to the upside. But there could be still sellers in this area from yesterday looking for further continuation to the downside. So do be mindful of that. Looking at oil, yeah, taking a lovely bounce out of this area this morning. It was a hell of a day yesterday. We were bid up into this area quite early on in oil, and just really then when it came into the pit open, not much was going on the pit open. but then we pushed down through the 75 spot 74s over the US equities open. The stocks dragging oil down. Dollar was quite strong as well at the time. You can see the dollar on the 15-minute here. We'll just go back to a 60-minute. You see that dollar was strong at the time. I don't really think that's why oil came down. I never really think the correlation is that strict with oil in the Dixie. So coming on down here, finding support generally at the 73.70s, which was that high from the 30th of July. So yeah, nice little sort of pullback day yesterday and this morning for oil, but I think we can manage to come up and do a retest at least at the 74 or 75.48s. And then I'm very interested to see if we can push on above the 75 74s. This is a massive level. The 75 spot 74 is going back to 2015, and you can see on this chart it's really come into play quite a number of times as a huge line in the sand for the market. That is WTI oil. Gold, yeah, I mean, I'm not a fan. As much as we've seen some great levels to trade, here we are on the weekly bar on gold. You can see that, yeah, we have this beautiful uptrend going back to the weekly low of the 16th of March 2020. And that COVID risk bid up into that high in around, what was it, 2100. And then retest back in March this year, and then broken down completely in August this year. So for me, I think, yeah, we can find a bit of a bounce here on gold from that level, which was the low of the week of the 5th of April and the 12th of April. I think we can find a little bit of a bounce here, but albeit temporary. So as we play out over the next sort of 10 trading days, I think we're going to see gold lower and stocks higher. I'm open to being completely wrong about that, but that's really the tone that I would see. So I'm kind of also looking at a bit of bear flagging here on gold as well, just to show you the channel. And even a bit of compression. I think we can easily just kind of push down and flush down through the 1728s below. All right, that's it for me for today. We have some European data coming out now in 4 minutes time, live in the room. If you haven't subscribed, go to duggancapital.com or click the subscribe button on YouTube as well, and please do join us live every day trading these markets. All right, have a good one. Cheers. Bye bye.